Hello everyone, and welcome to another educational video. My name is Styliana. I'm the head of investments and market research at Pure, and today we will talk about what interest rates are and how they work. We will explain what is going on with the economy and the interest rates and what's the relationship between them. Before we start, I have to make sure that you already know that this is not financial advice. We create high-quality information videos, but only for educational purposes. Interest rates profoundly impact the broader economy, as raising or lowering them greatly affects people's behavior. Broadly speaking, higher interest rates make it attractive to save money because banks pay you more for storing your money with them. It's less attractive to borrow money because you need to pay higher amounts on the credit you take out. Lower interest rates make it attractive to borrow and spend money. Your money doesn't make much by sitting idle. What's more, you don't need to pay huge amounts on top of what you borrow. Credit plays a vital role in the global economy. In essence, it's a lubricant for financial transactions. Individuals can leverage capital that they don't have available and repay it at a later date. Businesses can use credit to purchase resources, use those resources to turn a profit, then pay the lender. A consumer can take out a loan to purchase goods, then return the loan in smaller increments over time. Of course, there needs to be a financial incentive for a lender to offer credit in the first place. Often, they'll charge interest. In this video, we'll take a dive into interest rates and how they work. Now, let's see why are interest rates important. Unless you transact exclusively in cryptocurrencies, cash, and gold coins, interest rates affect you like most others. Take a commercial bank. Their whole business model, fractional reserve banking, revolves around borrowing and lending money. When you deposit money, you're acting as a lender. You receive interest from the bank because they lend you funds to other people. In contrast, when you borrow money, you pay interest to the bank. Commercial banks don't have much flexibility when it comes to setting the interest rates. That's up to entities called central banks. Think of the United States Federal Reserve, the People's Bank of China, or the Bank of England. Their job is to tinker with the economy to keep it healthy. One function they perform to these ends is raising or lowering interest rates. Think about it. If interest rates are high, then you receive more interest for loaning your money. On the flip side, it will be more expensive for you to borrow since you'll owe more. Conversely, it isn't very profitable to lend when interest rates are low, but it becomes attractive to borrow. Ultimately, these measures control the behavior of consumers. Lowering interest rates is generally done to stimulate spending in times when it has slowed, as it encourages individuals and businesses to borrow. Then, with more credit available, they'll hopefully go and spend it. Lowering interest rates might be a good short-term move to rejuvenate the economy, but it also causes inflation. There's more credit available, but the amount of resources remains the same. In other words, the demand for goods increases, but the supply doesn't. Naturally, prices begin to rise until an equilibrium is reached. At that point, high interest rates can serve as a countermeasure. Setting them high cuts the amount of circulating credit since everyone begins to repay their debts. Because banks offer generous rates at this stage, individuals will instead save their money to earn interest. With less demand for goods, inflation decreases, but economic growth slows. On the surface, interest rates appear to be a relatively straightforward concept to grasp. Nevertheless, they're an integral part of modern economies. As we've seen, adjusting them can fundamentally alter the behavior of individuals and businesses. This is why central banks take such a proactive role in using them to keep nations' economies on track. That's all for today, guys. So if you have any questions or if you want to open a trading account with us, you can contact us through our website or our social media. We'll be more than happy to help you. So thank you for watching and wishing you a profitable trading week.